Time for Under 30. Today we're discussing Zeekr. That is Z-E-E-K-R. And then the ticker is ZK for the symbol. Joining us now, let's bring in George Tsilis, Senior Markets Correspondent for the Schwab Network. George, I'm just going to kick it to you. I got nothing here on this to add, and I'm sure you're going to help educate me here a little bit. Chinese EV maker with 2 days of trading history if you include today.
Well, 2 days of trading history is not a lot from, I guess, an investment standpoint. But I mean, this company Zeekr, it's actually a Geely, which is a large EV manufacturer, a large auto manufacturer, not just EVs in China. They're actually a substantial holder of Zeekr's underlying common equity and actually an investor in their business. And Zeekr is a pure play in the EV space. But they don't sell primarily in China. They actually sell majority of their products outside of China, including Russia, Kazakhstan, which is near China, but also in Europe, and they actually seem very popular. If you look at some of the sales number for the business, they are selling quite a few units, and their growth rate is actually pretty substantial. Now, last quarter, for Q1, they reported 33,000 in sales in total units, and again, that was higher by 117% compared to the same quarter last year. That's second best to Li Auto when it comes down to some of the best quarterly numbers in terms of volume growth with about 80,000 units. But that company, Li, as we know, has been established, is only selling year-over-year numbers that are growing in the 50% range. So Zeekr is growing. If you look at their top-line sales just in the last reported year compared to 2022, they actually grew their sales by about 58%. And they're growing their total monthly units now about 16,000. And so if you look at the annualized unit growth, it's pretty substantial. And the total units on an annualized basis are close to 200,000.
So, George, I was looking at this actually on Friday and the optimism around this name, and there was a lot of speculation that this was just like post-IPO volatility and we were going to see it fall. But does this give you an indication that there could be some IPO interest? Because that area of the market has been so dull lately. Yeah. To me, I was just like, hey, an IPO with 35% gains off the gate, that's not a bad thing for the overall IPO market.
It's not. In fact, there's another story that I think is going on here. That's U.S. interest rates. I know it sounds something completely different than what we're expecting in terms of, EV stocks, but U.S. interest rates with the expectations of them starting to fall, we anticipate sometime perhaps into this year, that's going to benefit from an equity standpoint more so than the United States. It's going to benefit the emerging market. So I think if you just, back down this macro element or catalyst that's going on in the Chinese stocks, I think ZK is participating as part of that. And so, again, that's why I think it's moving, pretty substantially today. The news today isn't really meaningful. You have to consider that even though they're growing their sales, their losses are still quite large, around $1.2 billion. But, if you look at the sales last year, the losses were still about $1.1 billion. So they're growing their sales a lot faster than their losses, and that's what you want to see. But nonetheless, they're still losing money because if you look at the $200 million in shares that were issued with a $1.2 billion loss, it's almost $6 a share in losses.
Yeah, and that's a good point as well, George. And I think also important with looking at these like post-IPO names, like it's a long path to profitability in most cases. So it's a longer term story definitely to watch, but appreciate the breakdown as always. And I just like to see a name that is seeing some positivity post-IPO. But George Tsilis, as always, appreciate the insight. Senior Markets Correspondent for the network.